North Korea shoots another missile over Japan. The response out of the comics. The stock market at new highs. My field no longer analysis, but basic aeronomics. And stay tuned for a 1-minute lesson from basic economics.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of good ideas and opportunities for you throughout the show. Well, the stock market moved up early in the week last week and basically went flat, now with the S&P 500 hovering just below the 2,500 level. Trading ranges went from small to basically non-existent as minor downside blips continued to bring buyers. In fact, all 5 days in this week showed the stock market trading in an upward bias, no matter whether it was ticking down overnight or not. Signs of pickup in inflation and the North Korea missile shot over Japan just brought minor head fakes to the downside, and the market continues to be incredibly strong. President Trump, he reaches across the aisle, has dinner with Nancy Pelosi and Chucky Schumer, and trying to get something done that he obviously cannot get done with the Republicans. There is a plan to release a plan on for taxes in the next couple of weeks, and that seems to be really getting tempered back. Now talking about no benefits to the rich. Of course, it depends on where they cut off the rich. And, of course, the rich are the people that hire people in this world. So you got to really wonder whether or not this is going to be a watered-down tax plan, whether the stock market investors are going to be very happy about that. I think it's going to be much smaller than what the president campaigned on, and could possibly bring some disappointment. The stock market continued to move to new highs and up in the area where the air does tend to get thin. Of course, I'm just guessing that in my new vocation of aeronomics, look up that word, that's likely to make it a little tougher going to the upside. We're going to talk a lot about that during the show, and especially when we look at our short-term view for the coming week. Let's take a look at our 60-minute chart of the S&P 500, the ES, to see what happened during the week and what little news there was out there that could have influenced the market. You could see what happened on Monday, basically. The market was moving up overnight. Notice the gap right over here. There was some relief after North Korea did not launch anything. They expected that to happen over the weekend. Of course, it did happen then on Friday, so you got a pretty good uptick and a nice up day on Monday. Dollar had a bounce, and gold started to correct to the downside, and the S&P 500 moved to a record. And by the way, it moved to a record also on Tuesday. Gets a lift early in the day from Apple on their launch, and they have a $999 iPhone X, which to me is going to be a very, very tough sell. Bonds break on UK inflation up 2.9%, and that might be the beginning of some trouble for the bond market. Apple suppliers on Wednesday were pulling back as there's a delay on when that iPhone X is coming out, so they were leading the markets lower overnight, but then oil stocks got firm. The IEA said demand for 2017 was going to be stronger than originally anticipated, and that gave the oil stocks a lift. Oils are on the list of my best stocks for the week. You're going to want to see that. Then Thursday came, and another day where the market moved down early. You can see right here before the opening where the CPI comes out at plus 0.4%. The year over year now at 1.9%. The core up 0.2. The year over year at 1.7%. This is the minutia. This drives me absolutely out of my mind that the Fed is looking at these little tenths in here and sitting at 1.25% on interest rates. I mean, this is some sick stuff that they're looking at that. In the morning on Friday or late afternoon on Thursday, we got this news that North Korea had shot another missile over Japan, and the response is just absolutely ridiculous. It's nothing. I'd be shooting down their missiles. That's what I'd be doing. And so the market had a little blip to the downside, you could see, and then basically rallied throughout all the way into the afternoon on Friday. And here we are with about an hour and a half to go in the day. You can see we got this little flag being formed in here. And like I said, we went from small ranges to almost no ranges. Look what's going on in here as these are quoted in half points. You could see that. I mean, it's just very, very narrow range in here. In fact, these last 3 days in here, I've had a range in the futures from 24.98 down to about 24.88. So a 10-point range in 3 days. I mean, this is some sick, weak stuff when you look at that, and that is what happened in the on the 60-minute chart of the S&P 500 for the past week. S&P 500 up now about 1.5% on the week. The NASDAQ up about 1.75% on the week. The Dow and the Russell both up around 2% or a little better for the week. So all of that happened on Monday and Tuesday, basically, and the market has just been, you can see, chopping away in this narrow range for a few days. Bond market, I'm going to talk about this in the short-term view. Short-term breakdown in there that is worrisome. It looks to me like the traders are believing that we're going to get some hawkishness out of the Fed. Now, it wasn't too many weeks ago that I said I thought that the Fed was going to stay pretty dovish and it was going to be hard to get another interest rate increase out of them. But now we're getting some signs of inflation, and they're going to start to look at that and say, holy cow, we have a 2,500 S&P and we're at 1%. Maybe we're causing some problems out there, and then maybe the Fed is going to change their tune. So the bond market, 30-year bonds down about 2.5 points for the week. That's a pretty good size decline. The 10-year yields on the 10-year notes up 14 basis points. That's a pretty big pop in there. Dollar tried to rally, but then Thursday and Friday gave most of that back, a tiny up week there. Gold pulls back after a really sharp upside move that we caught really nicely. So a modest retreat, $22 down, and silver market down about 25 cents. We are positive in there. I'm going to show you on the short-term charts that we think there's going to be at least another short-term move to the upside in here, and for my members I'll be doing some big picture analysis showing you what I think is going to happen into the first quarter, that coming in the next several weeks. So the gold market will be looking at it in some depth. Oil up about $2.20 on the week. There's more hopes that producing nations are going to get more control of supply, and as I said, the IEA said that demand is stronger for 2017 than they expected. Oil stocks also got a lift. I'm going to show you some of those in the best of the week, and this was the biggest up week for the energy market since July. So here comes the Fed again. This Tuesday and Wednesday, we're going to going to have their meeting Wednesday at 2 p.m. Eastern time. The Fed will have their announcement on interest rates, their policy. 2:30 there'll be a press conference for Janet Yellen. So we're going to hear a lot more about the Fed. There's no secret about how I feel about the Fed. I think that they have been the reason that we have had some disasters, but I don't want you to take my word for it. I'd like you to just listen to a 1-minute clip here of Thomas Sowell. This was about 7 years ago, but just a real gem. Thomas Sowell, legendary economist, philosopher, columnist that he wrote a column for 25 years, written more than 30 books. Just an amazing man, and yeah, he's got a libertarian leaning, and that's why I like him so much. Just take a look, take a little listen to this, just 1-minute clip.
Lots of questioners want to know whether you share Congressman Ron Paul's skepticism of the Fed, and I'm going to quote you. This isn't in Basic Economics, but a recent column. Quote, "For most of the history of this country, there was no Federal Reserve System." There you go, that dirty trick of bringing in history.
Ah, yes.
There was no Federal Reserve System, which was established in 1914 to prevent bank failures. But bank failures in the 1930s exceeded anything ever seen before the Fed was established. Close quote. If you could, if we could make you dictator, would you abolish the Fed?
Yes.
You would.
Yes. I mean, for the reasons I just gave, the history. There's no, the Fed represented wonderful hopes. But we've had so many programs that represented wonderful hopes that ended in disaster. I don't doubt that someone who is sufficiently scholarly could come up with examples of where the Federal Reserve made things better. But the question is, overall, what was it supposed to do? It was supposed to not only prevent bank failures, it was supposed to prevent huge changes in the money supply, in particular, great deflations.
Right.
The greatest deflation in American history occurred under the Federal Reserve System.
So that was Thomas Sowell back in 2010, and at that time, remember that the Fed had rescued everything, and the Fed may be getting a lot of credit here for lifting the stock market, and historically it might show that they saved things during this period. Of course, what they did was something similar back in the Depression time, and they did QE and then had to bail on it, and of course we had another crash in 36-37 period, and then we had them do the same thing in after the crash that occurred in the NASDAQ in after 2000, and then we had the same thing happen again when they blew up the bubble, the mortgage bubble that went through 2007, and then the crash through 2009, and here we are again with them creating this massive bubble. Now, people say it's not a bubble, right? I mean, if you look at PEs, they're at some pretty good records when you look at it on certain scales, but overall, people say not that bad, but they have prevented the purge from happening. And what they did was create the biggest earnings bubble in history. Biggest earnings bubble in history. You think these earnings are real? They're completely fake, and they're fake because they're based on interest rates being so low. Businesses have been able to borrow money for nothing, and then boost the price of their stocks and do things that made their earnings go up based on 0% interest rates. As soon as the Fed has to raise interest rates in any significant amount, the earnings bubble will pop. It'll sound a little bit maybe like the Bitcoin crash that we saw this week. Yeah, Bitcoin fell from almost 5,000 down to under 3,000, like a 40% pop. Maybe we don't get a 40% pop in the stock market because Bitcoin was truly a crazy mania. But the Fed is causing something in here that when it's over, it's going to be dangerous. We have an 80-something basis point yield curve between the 2s and 10s, which is unbelievable low amount. We have flat yield curves and they get inverted, but not at these low interest rate levels. Can you imagine if the Fed has to pick up interest rates like, say, a percentage point? We're going to be inverted at just no interest rates at all, at crazy low 2% levels, and that is going to cause major problems. Problems for earnings, problems for the economy, and problems for all these investors that got sucked in by this earnings bubble that we have right now. You want to read Basic Economics, also read the Hazlitt's Economics in One Lesson. Those are two great books. They're books that these Fed heads, I'm sure, are not all that familiar with. They're pretty much indoctrinated into the Keynes way of thinking that they learned in school, and that's their actions, really. And we're going to see before you know it that maybe what happened in 2001, 2002, or 2008 and 9, maybe that's 2018, 2019, 2020. I wouldn't be surprised, and we get one real big whiff of inflation, and right now we have the UK up near 3%, and we had those big inflation numbers in the last week here in the United States. That starts to happen, the Fed starts to act fast, and this stock market bubble is going to pop really quickly. In fact, the time that we have left for the rally, I think, that we're in right now, you probably could measure it in days. That is a little bit about Thomas Sowell, a brilliant man, and of course Hazlitt, another fantastic writer on true economics. That's what I have to say about that. And here comes the best and worst stocks for the week. All right, do this every single week. What I do is I go through my list of 300 plus stocks and bring to you what I think are the best and worst patterns for the week. Usually there's some pretty good news that came on them. Sometimes they're earnings, sometimes they're analyst upgrades and downgrades, and sometimes they're just chart patterns that are looking very interesting to me. So we have a little bit of all of that this week. We're going to start out by looking at one of the home builders. The biggest gainer for the week was BZH. That's Beazer Home. We're going to focus mainly on the weekly weekly charts in here. We'll look at a couple of daily charts, the shorter term, but my analysis is cycle analysis, and it's done basically on the weekly charts, and that is what I'm going to share with you. Now, when we do the short-term view at the end of the show, I do look more at the daily charts and some intraday, and that's really how we get our focus on the short-term view. Beazer Home having a monster week, up about 14% on the week, and here is that pattern. Now you can see in here these cycles. Now you can do a very basic lesson in here on cycle analysis, and if you want to learn, of course, more about this, you can become a chart subscriber and have these charts right on your TOS platform. So I want you to see that this is the basic, or what we call idealized chart patterns. Each of those right in there gives you where the lows of each one of those cycles is likely to be, and you can see how they line up. So this, we call this idealized, as if it rallied halfway up and then fell halfway. You notice that this one did that basically. Half the time was rallying, half the time was declining. But you can see that this ended up to be higher than where it started right in here. If that's the case, there is something acting on the cycle that's pushing it up, and that creates an uptrend. You can see 1, 2, 3, 4, and 5 cycles that all are in this uptrend moving up. Perfect cycle patterns in here, and if it's cyclical geometry if you've ever seen it here. Now this stock moves up through the target zone. That's the fib target zone we put in there. It's come a long way. You can see that in each of these cycles it tends to go only about halfway, a little less or a little more on the upside, and you could see right now that's basically where it is. So with this big move up like that, you could guess that the stock is going to meet some exhaustion and probably roll over. So I would not buy Beazer Home right now. It's having a great day. I would prefer to buy Toll, T-O-L, or DHI. They are both in strong patterns and likely to be able to give you a better opportunity for a rally than you see right in here. Now, we talked about oil, and oil having the biggest week since July. That has lifted some of the energy energy stocks. In fact, the biggest gainers were in the drillers, the natural gas, and solar, also moving to the upside. We're going to look at stocks in all three of those categories, which are the most of any category we're going to look at here today, with the energies getting big bounces, very, very depressed stocks. So we're going to look at NBR, which is neighbor, and this is a driller. Again, this has some great cycle analysis on there, and there's hardly a way that you could learn cycle analysis better than to become one of our subscribers, because I walk through this so much. So you could see in here, these are the idealized cycles. The broken line that you see here is the OIH. So in other words, you could see that the group, the way the group trades lines up very nicely with the way that neighbor trades. And you could see this one had this big rally, right? And then this cycle that came down to here, note that this is where the low was due. Then it had a rally that failed, and when it broke there, we gave the warning right there on the cycle break. And what that does is set you up for a big long decline from the point of the break through the bottom of the cycle, and you could see that happened. Now we're in this bouncing rally phase right in here. So you could see that this bounce on a 13% gain on the week is barely significant when you look at that. I mean, that is hardly anything. You can see the good bullish patterns in here. In fact, that made the inverted head and shoulders measurement perfectly there. You can see we had that marked off for a long period of time. That was fantastic. Well, this is just the beginning of a bounce. We can't say there's anything beautiful about this right now because it's barely ticking up. 13% gain. Noble Corp NE, similar action. You could see this little bounce in here. You could barely see it. Let's take a little closer look. And it moves up from $3 to about $4. It's a 9% gain on the week, and you could see barely perceptible when you look at that chart. So what you have here is investors that are essentially bargain hunters, running out of stuff to buy that's up near the highs, and then choosing to buy things that are very depressed. Here is Transocean, RIG. You could see the same thing. We've got the resistances marked off in here. We've got 965, maybe 1030. Those are upside targets in here, but overall you could see another horrible pattern. Note how it follows along with the OIH, that blue line right there. You see we have it named OIH. You could see that. And that's just a bounce in a very horrible group. It's going to take oil getting a significant move to the upside before we get anything that is really significant in there. Now we're going to look at a group now that I think has got a little better potential, and that's the natural gas stocks. Now, the biggest mover in there was Chesapeake. Chesapeake is just a skeleton of a company. Basically, they've sold off so much. But Apache and Devon, those are some pretty decent ones, and they had pretty good gains. Chesapeake up 10%, Devon up 6%, Apache up about 7%. So pretty good gains in there. I think the significant thing, and I'm going to show this in the short-term view, is that natural gas is in good shape. I think that natural gas, we've been bullish on it the last month. It's been moving up. It tried to break out in the last couple days, but then backed off after the attempt. And I'll show you that in the short-term view. Basically, we think that natural gas has got a pretty good shot at the upside in here, and we're likely to get some pretty good gains. Now, again, you will see the magnificence of the cycle analysis when you look at it. Even a piece of crap stock like Chesapeake is a $4 stock now, and we were super bearish on it when it was much higher. And you could see in here it's trying to get into a bullish period. You can see each of these rally phases. So the beginning of the cycle, the rally. The beginning of the cycle, the rally. Same thing here. The pitiful rally here. Once it broke down, it turned negative. We called that, and you could see that it sank right in here. And now look at this 1 week to the upside. So that's the beginning of something. This stuff doesn't top in 1 week. Generally, a horrible pattern will top in about 4 weeks. And this one's got, you know, potential for some more upside in here, but just because it's a cheapie and somebody will be chasing it. But overall, it's just a horrible company, and they sold themselves into oblivion is what they really did. Now here you could see again these. We've got the cycle comparisons in here for Apache, Devon, and Anadarko all laid over each other. You could see that in here as these names pop up. Devon, Apache, Anadarko. And so you could see they're all due to bottom right in this space over here. It's lovely when we do that. And you could see that as they laid out in here for the decline, they were ready for a rally. You can see each of these pieces right in here where they decline and then rally. You could see that right here, right? You could see that right in here, decline and then rally. And these are, that's where we are right now. So we get the pop in here. I think if it pulls back at all, you can buy it. This is known as a triple star. You see those three little stars in there, or spinning tops as they call them. And then you get the big up bar. So it was a down bar into the triple star and then the up bar. This is a completed pattern. Apache looks like if it's very buyable to me. Now, the previous cycle was really negative, and that's, you know, this big declining cycle here, the big declining cycle here. That's likely to get you a move up in here for a month or so and then start to fail and roll over. You know, you can measure the resistances and the targets by about the 50% of the 618. Right in here, I'm just going to grab the Fibonacci tool so that you can see where the upside target would be, basically. So it's right around here. Let's call it 46.50 to around 48.20. That's a decent move, right? So we're going to say that that's kind of the target in there. And this stock, you know, maybe get it to pull back a half a buck or a buck and give you a nice buying opportunity. I like that way better than Chesapeake, that's for sure. And here is Devon DVN. You can see the alignment. These two blue spikes point to our projected low, and that low came a little early. It tested it here, still moving up. This one probably gets up to that 34-week moving average, 36.70 approximately in here, and then it starts to roll over. You can notice that the importance of the 34-week moving average, a test here, a solid here. It tried to break down, couldn't, finally broke down, and then tested it from underneath and then broke down. You can see that. Note the break underneath that trend line right there, which is the cycle low, and that set up the bearish decline, and these cycles just absolutely scream at you. So these are three stocks in the natural gas category, of which I think APA and Devon are both buyable. The solar stocks, FSLR, that's not it, FSLR, sorry about that. I promise you I'll put it up here. There it is. So you could see in here, First Solar. Now this stock moves up as some analysts have liked it, but this is an enormously expensive stock. I mean, it's a 50-something, 60-time PE. So I do not love this stock. The pattern is positive. You could see the cycle action right in here, right? And then this really, really strong, what we call right-hand translation, doesn't leave much time to decline, and then starts moving up again. Perfect timing for that. So it moves up, but I think it's way too expensive. The one that I have liked has been CSIQ, and that one they keep lowering the earnings on there. So right now it's forward PE is about 11 versus 50-something or 60-something on First Solar. You could see we've had this in a positive upward cycle, and this low came right on time and then moves up. The anticipated area in here was around these extension zones, around 19 or so. So that's kind of where we think it's heading, CSIQ. I think this is a much better value than we see when we look at First Solar. That would probably be my favorite. Retail, another group that has gotten a bounce. Gap Stores up about 8%, and Macy's up about 6%. Is this the beginning of the holiday bounce, getting ready for the holidays? Again, you could see how cycles tell the story in here, and a very nice rhythmic motion. I think that Gap Stores the move in here has been excessive, and with a 8% gain here on the week. And getting late in the cycle, again, you could see this one went up about 3/4 of the time. We noted it was a bullish base configuration there, and we thought it was going to go higher. So here you could see it goes up about half the time and declines, about 2/3 of the time and declines, and now it's up about 2/3 of the time. So how much more can you expect out of that, right? It's a positive breakout. We would expect it to pull back underneath or to that level sometime into October, and then maybe get another lift again in another holiday Christmas rally potentially. But I would not buy it here. I think you're going to get a pullback in there. Macy's, you could see in here a pitiful rally after these cycles in here. Here's where the bottom was due. We noted the engulfing pattern right there, and it's been moving up ever since. I don't know, upside target about 23.35 potentially. We don't think it'll do much better than that, and then likely pull back. As you could see, we have it projected in there. So that is a look at the retail stocks that had good moves, 6-8% on the week, not too bad. Another stock that we want to look at, we did a special video on the tech stocks, and we did really well on that video. In fact, Greg, thank you, Greg W., he's kept a tally on there and said that basically our analysis of a lot of tech stocks, we were about 80% correct in that analysis. One of the stocks that we had as a stock that we thought was going to move down was NVIDIA. It was up 8% on the week. Analysts have raised the targets in there again. NVDA, this is one of the ones that has not worked out at least yet. Now I want you to see the analysis that we have in here in NVIDIA, and it's kind of operating in an upside wedge right now. So I just want to look at this, what we call the cyclical harmonic family right there, and you can see that what we have here is this kind of rising wedge, which it's now at the top of right now. We actually thought that it was going to roll over and move down based on these cycles right in here, but then it gets this lift based on this upside move, and now our downside objective is around 59.5, 159.5 right here. It's now 179, so that's about a 20-point decline. That'll, if we get a little more lift in here, then that target will be up. So that's our first downside objective in there, and we think that based on the patterns we're looking at, that this is going to run out of gas very soon. So you could see this cycle right in here, and then this cycle right in here calls for this decline. I would not buy NVIDIA here. I think you're going to get a much better opportunity. The last stock on the plus side that we're going to look at this week, Tesla, with the gain of 7%, TSLA. Now this is a monstrously strong chart. Now you can see that in these cyclical harmonic families, you could see this big one right in here made up of two pieces. You could see the smaller minor cycles right there. That's really clear, right? Now here's this one, and you could see that the two cycles right in here shaped up like this: a small decline, so that's this one, and then another rally, and then barely able to decline in this period. That's right over here. We have this noted as a very strong, what we call right-hand translation. In other words, it moved up most of the time period and then barely could give anything back, and then turned up in a big way. So they came out and announced this week that they're coming out with an electric truck, and that they're going to be able to have enough range for truck drivers. That would be a fantastic thing, really. A big gain on the week. Our target in here is up around this 78.6 extension right there. This right over here is the 161.8 and the 100%, based on what you look at. That's at 421. Our targets in here on the upside are 404 or 421 in here in Tesla. And we think we're going to see that in the next month. This is an extraordinarily positive pattern that laid out in here. I wouldn't have guessed it would have been able to do that, but the pattern is the pattern, and that is super bullish. And that basically is all of the strong stocks for the best of the week. Coming up right now, the worst of the week. So for the worst of the week, there's not a lot in here to show. Of course, the market had an up week, pretty strong. What gave ground was the miners and some of the gold stocks, as the kind of flight to safety that we had disappeared as the bond market's breaking down, and some of the stocks that were moving up in the miners, materials, golds, they moved down. The biggest ones I'm going to show you is Cliff, CLF. That's down about 11% on the week. And the biggest loser for the week in the 300 plus stocks that we look at. You're going to be able to see the cyclicality in here also. I don't know how anybody does their analysis without understanding the cyclical movement. Here you could see that what this points to is that each of these declining phases, that's this right in here, and note this is the DBB, that's the base metal, so it follows it pretty closely. Each of these declining phases brought you declines. You can see that, all of them. And here we are right now. This looks like about 3-4 weeks on the downside in here, and then likely moving up again. This will be a buying opportunity over here, but you pretty much have to let that play out in there. And that's Cliff. We're going to call it forming what will be a long-term bullish pattern, but right now just getting a bit of a pullback in there in Cliff. U.S. Steel is one in here that is very similar also. Now, if President Trump gets his infrastructure bill passed, after he gets potentially his tax bill passed, we'll see what that looks like, then this is going to be a good stock. So here we go again, 3 or 4 more weeks. You could see it aligns in there with the DBB. You can see that. And calling for a bottom in the next few weeks. So we're going to look for a little bit more pullback in here. Here's the intermediate supports right there. So we think around maybe 22.5, 23 in that area would be the point that we want to start buying it. AK Steel down 5% on the week. This has been, we cautioned that this was a negative pattern, and this is one we would have stayed out of when we did our last analysis on the steels, and that's because of this downward bias right here that you see. And so this is one that was down 5% on the week, and I would not be buying this one. There are better ones to look at. Now, the HMOs had a bad week also. Well, not major declines, but I'm going to put the word major top on them. As a matter of fact, the next stocks I'm going to show you, a half a dozen of them, are all what I would consider major tops. So I'm beginning to get I'm getting a longer term bearish bent on the stock market, thinking that we can count the number of days that the stock market has left on the upside, and I'm going to do that for you a little bit later in the show. And I think that some of these stocks are making major tops, and I'm going to show you them right now. I would put all of these next stocks in the category of sell. ANTM is the first one we're going to look at, Anthem. And here you could see the look of a stock that has beautiful cyclical patterns and rolling over. So this is pretty clear when you see this, right? Down 4.5% on the week, and you can really visualize, you can get the feel of what it looks like when a stock is rolling over. First of all, it edged out a new high like it was supposed to, because this is a positive cycle. You make another new high, but then you give up most of the gain. That is a horrible sign. This says decline into sometime in October. We think it could be somehow significant. I don't know, all of this talk about single payer, maybe that's affecting this group in here, but Anthem is a stock that really looks like it's top to us. Take a look at Humana, HUM. You could get that same smelly feeling. Note this evening star right in there. As it rolls over, there's a very good likelihood that is a major top in there also. Now we're going to switch around to other groups in here, and you'll be able to see some major tops. How about McDonald's, which has been holding up like crazy? This one has this engulfing pattern right in here. It came up right into the fib extension area right here, and let's just get this out where you can see it, and hit those upside targets and is now rolling over. It's still in a positive pattern, but we think that McDonald's has just gone way too far on selling breakfast all day long. Forget about it. So we think McDonald's has made a major top. You can see the engulfing right in there, and it is likely to move sharply to the downside. We believe McDonald's is a sell. Oracle is one of the few stocks that had any news. Talk about engulfing patterns. This stock is finished. Now, you can see in here, you get these upside cyclical patterns in here that seem to continue and go up. Positive pattern right in here. positive pattern right in here. You could see that, so you can trace those out right in these cycles, right in here and right in here. Those are positive. You get the rally, goes to a new high, and then it breaks down already right here. It's got all of this time into January to decline. This big engulfing pattern right in here, this actually will be yellow and potentially turning red in here. So this is a bad pattern, and Oracle is finished. Major top, it is a sell. Their earnings came out in line, but their guidance disappointed. The next thing we're going to look at is Tiffany, TIF, and you can see in here major top. It comes up and tickles that fib target zone right up over there. That's built out of this cycle right in here. Note the positive cycle patterns right in here. It's supposed to come up and make a new high. It tests the high on the fib target zone. It breaks down. It tests it one more time and then rolls over, down 3.5% on the week, and that is ugly. Let's just take a look at the daily chart on here, and you could see this engulfing pattern on the daily. It's also an island of the gap up and the gap down, and when we see that at a point where it tests a significant level on the weekly, then we believe it's going to fall all the way down here into November. That's the timing, and likely to get under $84, and that is an ugly pattern, and we think a major top in there. So that is a look at the worst of the week. There are 1, 2, 3, 4, 5 stocks that we believe have major tops. That is going to be significant as we move into what we think is major top period for the stock market. Also, maybe not all that far away. We're going to talk a little bit more about that when we get into the short-term view. All right, short-term view for the coming week. We do this every single week. We didn't do it last week, right, because we were on vacation, and now we're going to do it. When we did it 2 weeks ago before we left on vacation, we said we were looking out for a couple of weeks, and I would give myself about 60-65% correct on that. The energy market was a little bit stronger than we expected, and we thought it would have a negative bias in there in the choppy market, and it was overall stronger. The dollar, euro, we got those right. The gold market, almost spot on. I mean, really strong. We thought that the bond market would have a rally, test certain levels. They got through those levels on the upside, but then turned much weaker and broke down. We're going to get about half credit on that one because we didn't really call the breakdown. And the S&P 500, we thought that would have a week down and then a week up and move towards the new highs. And that's exactly what it did. So we're going to get a solid 65% for this last couple of weeks. So that was then, and what can I do for you now? Well, we're going to look at the short-term view for these 5 market segments right now. So when we do this, we look at the daily charts only, and we're going to look at light crude. Now, we're also looking at momentum when we look at this, because one of the, I believe, the keys to successful trading is understanding momentum in the market. And I use I use 3 different indicators for momentum, and the one we use a lot, and I illustrate here, is the slim ribbon, which you can put on your TOS platform just by going to our resource page on our website. The thing we're going to look at in here is light crude, which has a little bit of an odd pattern. And part of the reason for the odd pattern is that the hurricanes have really skewed some things in here. Now, here is that pattern, and you can see the cycle bottom that was expected here. And you can see that each of these bigger cycles has got 4 cycles in it. They're very clear in here. You can see all 4 of those right in here. If you can't see them, I'll draw them for you. Here is 1, here is 2, here is 3, and this failed one to make the correction in here 4. When you get the double alignment to the downside, you get bigger declines. Now, this decline in here was unusually large, and for it to have that decline and then move up in this period to a higher high is rare, as I would give that only about 10 or 15% of the time that happens. Now, the reason that you had the break in here was because there was a belief that Hurricane Harvey was going to significantly influence demand. And that is why you had that weakness in there. But then when the news came out about Hurricane Irma, and then also the news that the producers were trying to stabilize supply, and that the IEA made bullish statements, then you got another rally. So you could see 1 rally, 2 rallies, and 3 rallies. You see that? 1, 2, and 3. All of that pretty much spot on. So now what you see is we're in this little corrective period in here, and then another rally, and then a bigger corrective period. That's why we have it drawn the way we do in here. We're expecting for the next week that we're going to have a down week. We're going to get into this area of testing support. That level down there, we'll call it 48.65 down to about 48. And then move up again, and then have a bigger correction. But that's looking out about 3 weeks. So we're just going to look out for the next week, and we can see that, you know, there's a potential you pop up a little more in here on 1 day or 2 days, but then we think we're going to roll over like that. We're going to call it a down week, and that is probably not going to be a big down week, because you could see momentum in here is positive, and overall the sentiment is really positive. So there you can see light crude with that positive momentum. I want to look at natural gas, because we've been talking about the bullish condition in here on the intermediate phase, and you could see in here there's a lot of cycle analysis in here, and you could see our little buy zones right in there that we have in there for our members, and look how well those worked. And so each of these cycles in here, this period in here was the end of an intermediate decline. This was the beginning of an intermediate advance. You had the positive cycle here and the next rally here. This is textbook cycle analysis. The upward objective in here is 312 to about 318 right there, and then probably even better than that. But you can see we're in this rising phase, and that's bullish. You can see here when you look at the momentum is turning positive. It's not really giant. It hasn't been able to move out, and you could see in here the slim ribbon, it needs to widen to really get some sense that you're getting strong momentum, and that's not happening yet. And when the slim ribbon is close together, you get into some choppy periods like you had back over here. So right now it's turning positive, and I think it's going to be even more positive, but it's not quite really showing us a lot of life yet, and that might be coming before you know it. So I wanted to show you the natural gas market because I think it's significant. Now, for those of you that are members and you see our option bias rankings, we got significantly overbought here on the hurricane, and this thing stayed strong in heating oil. You could see that in gasoline /RB. You can see that actually this was perfect, spot on. I mean, it was a day from the top when we got that orange. See that little orange star, right? That little orange arrow right there. That's our downside signal that it's extreme overbought. You can see the correction in here. This looks like it has another week and a half or 2 weeks to go, so that's probably gonna, you know, be in alignment with oil not being able to get all that far. So that is a look at the energy market. I wanted to take that little deeper look in there so that you could see that even though we're looking for light crude to pull back a little bit, natural gas really looks like it could be a powerhouse to us. So the dollar, it basically chopped. I mean, it gained some ground and then pulled back. We said the euro a couple weeks ago just looked super powerful, and the dollar looked super horrible. And overall, I would say that that analysis has been right. We've been looking for the dollar to be tracing in this downward pattern, and you could see that very clearly in there, where each of these bigger cycles and smaller cycles is very clear. So if I just look at this one, we'll call that the minor cycle right there. You could see rally, sell off, rally, sell off. You could see how that follows that, right? And during the time they're both declining, you get, you know, some sharper declines. Here you get the rally and the sell off, and then the rally, and yes, we're in this sell off period over here. So this isn't necessarily a very good period for the dollar we're coming into. We're going to call a downward bias, and if it tries to get a little more upside in here, we think that that will fail, and we're likely to see 91 again or below 91 in this near-term pattern that you could see in there. You could see here in the momentum, we keep making the point that while momentum is clearly negative, that you could see here, every time that the momentum is negative and the projection oscillator gets overbought, it falls, overbought, falls, overbought, falls, overbought, falls, overbought, falling. You can see that every time. And you can see it over here too. So this is a perfect look at how this fantastic pair of indicators works and tells you the condition of a market. This condition has been bearish, super bearish. If I just switched over to 6E, which of course is the inverse correlation, to that you could see the super powerful look in here of momentum, and each time it gets oversold right here, right here, right here, you get more rally and more rally and more rally. You can see that, and right now we're getting an uptick right there. So that's a look at the momentum in 6E, super powerful. And you can see in here that during this period of strong momentum, it's been moving just sideways and correcting. So we get this sideways correction that you see in here, and it's basically range bound, right? You can see this range right in here, and that doesn't surprise me. And then in another week or so, maybe it's 3 or 4 days, we expect it to get an upward pop right over there. So the euro currency still looking really strong. The dollar is still looking horribly weak. So the gold market, we had expected that it was going to have a big upside move. We did videos on it for our members, and sure enough, it had a big upside move. It exploded up to 1360 and then pulled back. Had a pullback week this week as the stock market has firmed, and stock market remains super strong. And I had to cover my mouth. I almost said a bad word. Then because the stock market's super strong, nobody feels like they need to be careful about anything. So, of course, the VIX is low, and gold market gave up some ground. And here is the gold market right in here. So we're going to look at this daily chart. But guess what? What's pointing to in here? It's pointing to the end of this correction that we're in. And you can see our projection in there, that it's come down now to this minor buy zone right in there, and just tickled it by a little bit. Bottom of the slim ribbon, you could see the upward momentum in there as this slim ribbon has been just driving it on the upside right there. If you don't have the slim ribbon on your daily chart, you're missing out. And that is the minor support right in there. And we think it's going to pop. You can see that. I would expect it to get back up to 1360. Note the momentum in here, still strong, oversold and green. When you get oversold and green, the chance is pretty good you're going to get a rally. I would say it's 70–80% in their probability that you're going to get another rally. Just take a look at silver in here, and you could see in here it's the same thing, oversold. Note that, still green, very likely to get a rally. Here's your cycle analysis right in there. You could see the lows that came right in here, the rally projected. That's why we have that projected that way. It doesn't even get down to the 23%. That's how strong it is. You could see that slim ribbon pointing to the upside, positive momentum, and just a very, very good looking picture here when you look at silver and gold for another pop to the upside. So now we're going to look at the bond market. Now, I have thought on the intermediate that the bond market was in a bear market, and that the last months, while we've been traveling up a wedge, has been a bear wedge, and that eventually it was going to break to the downside again, and the bear market and bonds would resume. I'm starting to talk about that a little bit more now as I see breakdowns I'm going to show you, and also the fact that we have the Fed coming up, and it looks like the markets think that the Fed is going to turn hawkish in here. So I'm going to show you these charts in here, and you're going to see when I look at /ZN first, the breakdown that I am looking at. Now, there are a lot of cycles on here. So what I want you to focus in is on the dashed line. The dashed line is the what is the dominant pattern right now. You can see the dominant pattern in this dash line and how this low lined up here and this low lines up here and this low lines up here. As a matter of fact, this was a nested low period that was an important low, and we thought we'd get a rally, and the rally came. You could see that. In fact, our upside objective was over 127, and it got up here to about 127.20, so it was a pretty good move. And then it broke down. So we're going to look over here closer, and you can see we've gotten underneath this cycle line right over here, underneath that rising support area there, and that is bearish. That's a bearish violation. So you can see our projection right in here points to the bond market moving to the downside. As a matter of fact, this area of around 126.26 and a little higher, that's a declining resistance. We consider that a sell zone. If you got a bounce in there to that, and then we think it would be a high quality sell. This is a breakdown that we're looking at there in the bond market. You can see those clear cycles in there, and it should be rallying based on these rising phases that you see there, but it broke down, and when it does that, it says that some major force, the force that was driving it on the upside right in here, is gone, and that force is now a downside force. So it didn't let this rally, and now we got this long period of potential decline in here. This is a high probability that it's a short-term breakdown, and the longer-term breakdown is far away. You could see we're still above the 89-day moving average, but when you look here at the momentum, note that the upside momentum has been lost. So you could see this has turned neutral. It's not all that far from turning red. When I switch this over to the ZB, you could see the same thing. It has turned neutral. It's oversold. You might get a bounce in there, and that's the bounce I want to sell, but this is not all that far from turning red either. Here's your ZB pattern in here, and you can see it just gets underneath there. It violated, and now it's just trading above right now. So this is a warning in here, and you can see our projection right here that is projecting to the downside. And that is a first sign of a weakening bond market, which could be setting up for some big declines in there, or big increases in the interest rate market. And it's, you know, if you get the Fed in the next, you know, couple of meetings through the end of the year raising by 0.5%, I don't think you're going to get the 10-year moving up by 0.5%. So again, you'll be getting a flattening, more flattening. That's horrible. And when you're in an 80-something basis points between the 2s and 10s, the banks can't make any real money. So the bank stocks, and I did a video on this yesterday, on Thursday, where I talked about cluster risk and focusing on the FANGs, the tech stocks, the NASDAQ, and on the XLF, and those stocks are showing a lot of weakness in the financials, and that's because of this bond condition that we're seeing right now. And believe me, if the financials break down and move down, that is going to be a cause for this period of nirvana that we're in to end. So that might not be all that far off, and this week we might see that. I'm going to talk about that as we look at the stock market. Before I look at the stock market, one little promo in here. All of this analysis that I bring you, this is hours and hours and hours of work. It takes a big team. I have analytical support in RV, and we have to run this whole business with our support team, and the only way we can continue to do that is if you become subscribers. Thank you to all of the people that are out there, the many subscribers that we have, because you allow us to keep bringing all of this information. And I'm asking you, the people that are watching this show, that is a free show, to become a subscriber. Help us to continue to bring all of this information all the way until my retirement, whenever that is. So become a subscriber and help support the business and help us to keep bringing this information. Let's take a look now at the stock market. SPX is where we're going to start, the S&P 500. So what we believed was going on was that the intermediate pattern had moved past its period of extreme risk. We talked about that a few weeks ago where we said the time was running out, and then we thought that it had ended. And that proved to be correct. So here is the chart on the S&P 500 SPX on the short term. Now, this is pretty significant. First of all, there are two cycles in there, and the dotted line is the one that's become dominant. It's about 16, 17 days is what we're looking at in there, and you could see all these 16, 16, 15, 16. That's the one that's really become dominant. That low is due actually right now. But all we're getting is a sideways move in there. That is extraordinarily bullish. You can see where this older cycle affected the market right in here, and it made a bull triangle, and then it broke out on Monday out of that bull triangle in a big way. So this was a very solidly bullish pattern, and now the upside targets in here are looking like they're right around up here. So this is the fib extension line at about 25.20. If we pop through 2500 and all we've been able to get up to is all 24.99 and a quarter, the way this pattern shapes up is that we're likely to get a lift in here. But you see this little note to myself in here where it says VIX low due right there? There's a VIX low due, and I'm going to show you that in about 3 or 4 days. I'm thinking this next rally in here is not going to last long. Maybe you spike up past 2500, maybe you get to that fib extension at 2520, but then I think it rejects, and rejects in a big way. So the pattern right now that we're seeing is positive, and there's no way to argue that. And we've been seeing positive patterns in here for the last several weeks as we move past this period of extreme risk. You could see that right over there, you could see it right over here, and we got some declines, but they were pitifully poor when you see that. We didn't even get a 3% decline. I mean, that is incredible when you see that. So a super strong market. And now when we get into this corrective period and all we do is get these little dots right in there, we've lost all volatility. That says that you're likely to get one more pop. We're going to call for an up week that fails as it crosses over 2500 and then pulls back. So we're going to call it 3-4 days on the upside and then down. Maybe it rallies into the Fed and then has a big reversal, which is a common thing for it to happen. So that's a look at the S&P 500. Now when you look at some of these other indexes, and I'm going to go back to momentum in a second and show you that. You can see in here that when we look at this one, the dip was a little more well-defined, as is the rally in here, as Apple gets a pullback and then a little bit more legs. Here's that VIX low due, so we get 3-4 days on the upside into the Fed and then turn down. That's what I think that the pattern is calling for when I look at that. You could see the Russell RUT in here, a similar pattern. Note the option bias extreme oversold right in here. It called the bottom perfectly, and then we get the rally and barely a downtick in here. So just incredible strength. So we're going to look for a little bit period of more advance in there. Take a look at the Russell. You could see the Russell moves into a period of positive momentum, and no doubt that it's looking strong in there. It's not even overbought when you look at the projection oscillator. The NASDAQ and the X, you could see that still looking strong, and when you look at the SPX, you could see that and still looking strong. So all of those give you a sign of positive momentum. One more chart that I want to look at, though, is this chart right in here, and that is the intraday momentums, and you can see they're all super strong. But the one thing that I want you to note in here, and maybe it's just a little bit of a sign, or maybe I'm looking at straws, but you can see the NASDAQ is starting to show relative weakness to these uptrends in strength in all of the other indexes. You can see that the Dow Jones is the strongest one of all when you look at this. So this is Apple, and we talked yesterday in the cluster risk video about the fact that there are a few of these stocks in the NASDAQ that are starting to show negative signs. That's an important thing. We're going to watch for more of that, and likely that NASDAQ will be the downside leader to me if there's any truth in the fact that the market is peaking. So I wanted to come back to this chart, the S&P 500. I want you to see the VIX low do and why I have this projected to 3 or 4 days on the upside. We're going to switch over to the VIX chart right here, and you can look right in here, and you can see these patterns in here that call basically for each time you get to the bottom of these what we call nested cycles, right, and there you get rallies in the VIX. So you see it here and here and here, and one here that did not last very long and declines right to this period. This is 3-4 days, we'll call it, and that's why I believe that the stock market might pop over 2,500 and maybe rally into the Fed, but then after that we're looking at the next period of stock market weakness right over there. Now all we know is the VIX is likely to rally. We also believe that that would coincide with the stock market ticking on the downside. We do not know the magnitude of the decline, and based on when we see that, that only helps us with timing. So that's why I believe that, like I said in the beginning of the show, you likely could count how long this rally has left in days. That's the way it looks to me, and I think it's going to get spent on the upside, and maybe it's right into the Fed. Man, I showed you a lot in this show. Don't forget, follow me on Twitter at askSlim. Go to YouTube and follow our videos over there. Become a YouTube subscriber and become an askSlim member and help us keep all of this information coming to you as we do, with just probably the more information in 1 hour on the market, on the technical side, and even more than you will ever get from anybody else. So hopefully it's been a period of learning for you and interest, and go read Basic Economics or Economics in One Lesson and get rid of that Keynesian nonsense that's out there, because man, it pisses me off. I want you to be careful, because man, it is dangerous out there, and I'm always wishing you great trading.